George, we talked earlier, the gold ETF helped expand the investor base for gold. But the same thing is happening here with Bitcoin. There's been huge inflows into Bitcoin this year. And I'm just wondering, is Bitcoin any kind of competition for gold? How do you view that?
I don't believe it. I mean, you know, some people have tried to find some kind of inverse correlation between flows into Bitcoin, flows out of gold. We've not been able to find anything that's statistically persuasive on that. I think the point is that they basically do two different jobs. Gold is essentially a very protective asset. It'll protect against potential weakness in equities, protect against inflation, weakness in currencies, all kinds of different things like that. Bitcoin, pure and simple, it's a return play, and I think that people have been jumping onto the return plays. That's what I mean by a risk-on mode, which is where investors are right now.
I find it curious that people call Bitcoin digital gold because I don't get the correlation, frankly. I mean, gold has been money historically. It is a store of value. That is very questionable whether Bitcoin is actually a store of value. It does have real use cases. It has industrial use cases. It has jewelry use cases. Not the case for Bitcoin. I kind of don't get that analogy with digital gold. I get it as people trying to promote a potentially new asset class, but not. It doesn't have the characteristics that gold has.
No, it absolutely doesn't. I think the promoters of Bitcoin, I mean, this is why they called it mining. There's no mining involved. This is a computer operation, pure and simple. But they called it mining because they wanted to seem like gold. Maybe take some of the aura away from gold. And I think that was what they were trying to do, and this digital gold thing. Look, the returns have been stellar in the 15 years since Bitcoin was launched. I can't deny that, not a problem. But it is all about returns, whereas gold, I think, Todd mentioned the diversification benefits, as I say, and the protections that gold offers too. Those are really, really crucial for investors.
Bitcoin versus gold, as an ETF flow guy?
To me, crypto is definitely risk on, right? It's a much newer asset class relative to the history of gold. I think the interesting thing that will happen is now with the new administration, they seem to want to, the idea is to put a solid regulatory framework around crypto. What does that do to its return characteristics? Does it go from being a speculative asset to something more streamlined like gold would be, or does it remain a bit of a wild west? So there's totally different use cases to me.
Yeah, I want to talk about gold as a hedge against inflation. So there's this very strong belief in gold as a hedge against inflation. But I've seen this debated over the years by strategists. Some note that gold did well during the 1970s, but very spotty as an inflation hedge since then. It didn't do a great job from 2020 to 2022 or early 2023 as an inflation hedge. What's your sense of this? Is gold a hedge? Does it work sometimes? Doesn't work?
It's not a good predictor of inflation. A lot of people think it is. I don't believe it is. Gold's also not going to offer you much protection against sudden sharp moves in the rate of inflation. So when you see CPI at 9%, that's not the time to go rushing out to buy gold. Gold comes into its own when we have sustained high inflation. By sustained, I mean a minimum of 2 years, and by high, I mean 5% or higher. Whenever we've had that, then gold has done very well, offering you returns of about 15% a year. But in the most recent bout of inflation, we did not have sustained high inflation. Gold and inflation were going up together, but not because of any cause. I think gold was going up for different reasons.
Yeah. Any thoughts on that? Still?
Yeah, I think it's all about the environment. I pay attention to, again, dollar real rates to me. That's the important overlay for gold. Strong dollar, usually not great. Weaker dollar.
Gold's dollar denominated.
Yeah,
it costs more to buy it in other
and
countries.
what are rates doing? And I think in terms of flows, for me, earlier in the year, gold flows were kind of agnostic despite the great performance. I think that was because stocks were up, bonds were offering good yield, they were starting to get back onto the field, and crypto was strong. So what are the alternatives doing instead of allocating to gold?
Yeah. I would note, as successful as the GLD is, it's not been immune to competitive pressures. It has spawned a huge wave of competitors. Here, put up a couple of them here. The iShares Gold Trust IAU is out there. They charge a lower fee of 25 basis points. In 2018, you launched a lower price fund, the Spider Gold Shares mini share, GLDM, which charges 10 basis points. There's GLDM there. And that's seen significant inflows. There's also competitors, and I think this is interesting, seeking to take advantage. It's a little quirk in GLD. Investors can only redeem their shares for cash. This is true of almost all these gold ETFs. But in 2014, Van Eck did launch the Van Eck Gold ETF, OUNZ, you see is the symbol there, and that provides the option to redeem shares for physical gold, including gold coins and bars, and it too has seen inflows. Is there a demand to physically actually suddenly convert into
I don't
gold?
think so. Let me correct you. Investors can buy and sell GLD. The investors cannot redeem.
Yeah, redeem.
It's only the authorized participants, the broker-dealers who make a market, who can create or redeem the shares. So you can buy and sell GLD. What GLD offers is exposure to movements in the gold price, and as you say, $75 billion worth of investor dollars over 20 years. That means that that's something that investors definitely wanted. We were the right product at the right time, and I think we still are. I think that's why we're more than twice as big as the nearest competitor as well.
Right. So the difference between, I just want to get GLD and GLDM. They're essentially the same product, right? One is 40 basis points, the other's 10 basis points.
And GLDM is based on 1/50th of an ounce at inception, whereas GLD is based on 1/10th of an ounce at inception. So it's a lower share price and a lower expense ratio to appeal to the retail end of the market.
And we've seen this with a lot of big ETFs, right? I mean, SPY has this too.
You know,
right?
a category in ETFs is popular when it starts spawning similar products, and then the fee race starts to the bottom, and then you start getting all the different quirks that you mentioned. That's how you know there's a sustainable ETF asset class, either brewing, developing, maturing, whatever you want to call it.
So do people, I'm trying to think the difference between the two. Do active traders trade the GLD because it's more liquid than GLDM, or does it?
Active traders certainly do, and there's an awful lot of institutions who are active traders. There's also an awful lot of strategic investors who say, I want to put 5% of my money into gold, but I need to rebalance that because the values in the portfolio are fluctuating constantly, so I need to rebalance that. The low transaction costs that GLD give you can outweigh the higher expense ratio that you pay for GLD. Also, GLD has an options market. The open interest in options on GLD are 99.5% of all of the open interest on all gold-backed ETFs. We have an options market in GLD, nobody else does. And options can be helpful.
There's no other gold ETF that has an options market, just GLD. Is that right?
Yeah. It's the only one with a real options market, and it can be nice to leg into a position or to write covered calls.
For a small investor, I mean, 30 basis points, the difference between GLD and GLDM, that's not nothing. I mean, normally we're talking about 4 or 5 basis points, and I'd say, but that's almost 1/3%. That's actually not insignificant.
No, but my broker has done the math over the 20 years that we've had GLD, and because I have a position that a strategic allocation that I need to rebalance, and because I like to use the equity market, I use the options market, and because I like to have a trading position as well, a tactical position, GLD makes financial sense for me in spite of that disparity in the expense ratio.
With the understanding that you're a gold guy, when people ask you what percentage, gold is an asset class, it has proven to be so. I think Bitcoin has not proven itself as an asset class. I don't know what you think, but when people ask you what percentage of I'm an average retail investor. Okay, I'm 65 years old. What percentage of my portfolio should I have in gold? I'm asking a gold guy here, okay, with that understanding.
You know, Bob, I've been looking for the average investor for 50 years. It's nice to meet you at
Here
last.
I am.
I don't know how much you should have because I don't know what your tolerance for risk is. I don't know what your needs for liquidity are. There's a whole bunch of different variables that your financial advisor should know about you. He's required to know his customer. He should know that about you. The literature says any portfolio can benefit from a long-term strategic allocation between 2 and 10%, and where you would fit on that spectrum, I don't know, but your advisor should.
Yeah, that's eminently fair to me, coming from a gold guy, 2 to 10%.
Yeah, I mean, you mentioned crypto before. The big difference is gold has been through however many economic cycles, however many Fed policy cycles. Crypto's only been through quantitative easing and 1 Fed hiking cycle. So yes, it's on its way to becoming some form of an asset class, but it needs to see far more economic cycles, I think, to get to the track record that gold has.
Yeah. I love to be representing an asset class that has a 6,000-year track record. I think I can draw some statistically significant conclusions from that.
Didn't the World Gold Council buy the first gold coin, the Lydian gold coin from like 500 BC in Lydia, like, 20 years ago, didn't they? They bought that really rare one.
I believe they did.
Yeah, yep. I remember doing this. We did a story, George and I, a long time ago on this. It was you don't see that. I think there's only a few in existence in the world.
Yeah.
Lydia was a source, of course.
I'd love to get my hands on one, but I don't think I can afford it, Bob.
I have no idea what it would be. So we have finished the first 20 years with gold at a new high. Give me a intermediate term outlook for the next couple of years for gold. What's a base case, a bull case, a bear case?
You know, when we launched GLD, gold was $450 an ounce. It's now $2,500. It's now 5 times what that price was then. If you look at a 5 times price, then gold should be somewhere over $100,000 in 20 years' time, if we go up at the same rate. I have no idea what's going to happen over the next 20 years, except it's going to be a fun ride, and I think that gold's going to do well.
And I bet you'll be there, just like you were 20 years ago. Your thoughts here? Will it be replaced by other kinds of assets, digital assets, or is the fact that it's a physical object and people like physical?
Yeah.
I collect old 60s rock posters. There are people who like holding actually a physical copy of Jimi Hendrix at the Fillmore poster, and they, for the same reason they like collecting collectibles, coins and stamps and physical objects. Do you think gold will continue to have that kind of?
Yeah, I think there's always going to be investors out there who know what gold is and does and what it's for in a portfolio. And I think from the ETF spectrum, you'll start to see more and more different types of products out there, right? We just had gold mixed with Bitcoin in terms of a stacking product. So the core of gold products, I think, are taken care of with GLD and IAU, et cetera. But you'll start to see different spins on it, especially if the returns are still strong.
Yeah, that's the motivation. If you get returns, you'll get all sorts of creative new ways to own gold. George, thank you very much. Always a pleasure to see you.
Thank you, Bob.
Many years with George here.